Hi there everyone, good afternoon. Welcome to this edition of Closing Trades. I'm Avan Devash and with me is Aisha Faridi. Well, quite different from the texture of the market that we witnessed just yesterday. So 24 hours and it's been quite a change. So you've got the frontline indices that are quoting at the highest point of the day as we're marching towards the 17,500 mark in trade. In fact, we snapped that 8-day losing streak and the index as we speak is trading above the 200 DMA. In terms of sectors that are supporting, well, you could say it's across the board. Metals are really leading the way with a solid 3.5% surge. You've got the PSU banks giving it company, IT, real estate, not to mention the Nifty bank index as well, currently high by about 390 points. And it's not just the frontliners, the broader markets as well are seeing a smart rally in trade and outperforming. So close to 1.5% gain that you're seeing for the mid and the small cap indices as well this afternoon. In terms of individual stocks as well that are taking leadership, it's the Adani group of stocks without a doubt. And other than that, you've also got a Reliance Industries, that's another heavyweight, IndusInd Bank, ONGC, a cluster of IT stocks like HCL Tech, Tech Mahindra, SBI, Tata Steel, Tata Motors. So across the board, there's traction that's clearly building up. And Aisha, a pretty firm breath at hand. And add to that, you've got the European markets as well that are holding out in the green.
Yeah, the European markets are, fortunately. So we've got global support. In fact, across the board, you are seeing mild to about 0.5% in the green for the European markets. But for our markets as well, the breadth is holding up nicely. And I think that's the biggest takeaway from the last two trading sessions. Even yesterday, when the Nifty could not hold out towards the dying minutes of trade, while it did recover from the session lows, but not quite out of the woods, the market breadth was resilient. And so is the case today as well. In fact, all sectors are floating in the green as we speak right now. We're up 125 points, 17,500 is back on the Nifty futures. So you are seeing a fair amount of short covering. SBI is the leader amongst the large caps. That's holding up a solid 2.5%. Axis Bank is looking very smart indeed, 2.5% higher there as well on the futures. IndusInd Bank as well in the green. And then technology is really leading sectorally. So TechM, HCL, TCS, these are all names which are holding out well after getting beaten down all through this week pretty much. Metals as well are making a comeback. Hindalco holding up 3.25% as we speak. And the Adani Group's entities as well are seeing a fair amount of covering. Adani Enterprises is now holding up 12.25% as we speak right now. Let's take it across to Kunal as well as Naresh and find out what they've made of the trading day so far. And Kunal, good call in the morning. Back in the green and significantly so.
Thank you so much for that, Aisha. So yes, I think it's a very interesting breakout for the index. Recovery for the Nifty, I would say, and strong outperformance from the Bank Nifty, which I think is the highlight for the trade, because Bank Nifty over the last 2 or 3 days was showing a bit of resilience, if I can put it that, with respect to the Nifty. But today is the day where the Bank Nifty is showing a lot of strength, as well as the leadership coming back again. Now we can sort of question that the recovery in the large cap private sector banks is not as strong, but then till the time you have all of these stocks participating small. As well as the larger comeback coming from the PSU banking names, I think there should not be any major concerns for the banking index. The good part about the data today is that it's been led by a slew of short covering across various sectors. So, for example, a few sectors you were highlighting, the likes of metal stocks, they're seeing a very good round of short covering, the likes of JSPL, Hindalco, etc. Even the likes of auto stocks are seeing a round of short covering for themselves. And short covering typically is at least a 3 to 4 day kind of a phenomena. So, all put together, I would expect that this momentum would continue for the indices, and 41,000 approximately could be a very near-term target range for Bank Nifty. For someone who's holding on to long positions or someone who's initiated longs, I think they can continue to carry forward with those kind of targets in mind.
All right, Naresh, let's get in a sense as to what you make of the markets as well. The fact that you've got support coming in from all quarters, be it the high beta plays, IT, and even the Nifty Bank Index.
So very clearly, we can see a lot of momentum across the board. Say the broader market has finally seen a good uptick. Say today's uptick cancels out the last 3 days of a fall. And say in the last few bounce backs which we were seeing around this price point, we are not seeing the broader market do well. So today all the indices are doing well, whether it is Nifty, Bank Nifty, BSE Small Cap Index, Nifty Small Cap Index. So that's a very strong indication when all the indices do well. And also what we are seeing is, if you look at some of the heavyweights like HDFC Bank is flat, ICICI Bank is flat, and still the index is doing well. So that's a very strong indication. Now we need to see whether it can sustain above 17,500 mark. But overall leadership is coming back into a lot of names. So PSC, public sector enterprises look interesting. Oil and gas looks interesting. So And NBFCs is another space which looks interesting. We are seeing a breakout in AB Capital. We are seeing good resilience in Mahindra Finance or uptick in L&D Finance Holding. So overall, time to watch out for NBFCs, some of the banks as well as oil and gas.
Okay, let's get in a view on individual movers then. And Kunal, wanted to understand what exactly you're making of some of the frontline banks that are taking leadership this afternoon. The fact that Axis Bank, IndusInd Bank, etc. fueling gains on the Nifty Bank Index, because you were pretty bullish on the index this morning as well.
Well, yes, and I think it's a good sign that these stocks are making a comeback for themselves very slowly and gradually. I would say Axis Bank coming back after I think a 3-day or a 4-day swing high for itself. Even IndusInd Bank, the stock bouncing off from almost exactly its 200-day moving average. The stock had been trying to just trade or float above its 200-day moving average over the last 3-4 days. So this could be a very good and a credible bounce back. And we've historically seen that when these kind of bounces from the long-term averages, when they shape up, the stocks have a tendency of coming back closer to their 50-day moving averages. So even if we take maybe another couple of days from here, then we can expect at least another 5% kind of an uptick for these individual banking stocks. So would maintain that bullish stance even on the back of these kind of technical chart structures.
Right, okay. Just looking at some of the other buzzers in trade, BHCL has spurt up quite nicely today. It's holding up 4.5% as we speak. I was just talking about the entire metals pack. So Hindustan Copper and Nalco are the two very, very buoyant ones. In excess of 5% is the gain on both. And then, of course, you've got Rain as well, which has shot up nearly about 9% in trade as we speak right now. So these are a couple of stocks which are buzzing up in trade as we speak. On the flip side, though, Interglobe Aviation, TVS Motor, Power Grid, and Britannia is the one which has fallen in excess of 2.25% as we speak right now. But Kunal, what do you make of the recovery that one has seen in metals and pretty much across the board?
I think it's a very good recovery, Aisha, because the stocks, for example, Hindalco, JSPL, I'm not saying Vedanta, but most of these stocks, they were beaten down significantly. The RSIs on the hourly charts were almost at single digit for these names. And that was not the phenomenon yesterday, but in fact day before. And yesterday these stocks fell by another, I think, 2 or 3% on an average for themselves. So this goes to show that this may not just be a very short-term relief bounce, but this could be a relief bounce or a relief rally which may last for at least 2-3 days. And there could be a tendency for these stocks to come back to their at least 3-day, 4-day swing high, which means possibly another 4 to 5% on the upside for these metal stocks could be at play. More interestingly, most of these metal names are coming back towards their trendline supports, their long-term trendline supports. And that's also an attractive phenomena. So whether you are a short-term trader, you're looking out for another 4 or 5%, you could still play for an upside over here. Or else, if you're looking out for more positional or longer-term play, buying these stocks at mean reversion points always generally provides a good risk-reward to enter.
All right, in the meantime, on the sidelines of the NASSCOM Tech and Leadership Forum, my colleague Anisha Jain caught up with the body's chairperson, Krishnan Ramanujam, who to discuss the outlook for the sector as well as the outlook in terms of trends going forward.
All the areas that you mentioned are indeed showing some weakness. We'll of course present the NASSCOM industry-wide data a little later in the day, Anisha. But yeah, all the areas that you mentioned in terms of retail, mortgages and insurance and so on from a banking and retail point of view, that's where we probably see a lot of those. And a little bit of manufacturing as well, we are beginning to see in terms of decision delays and so on. But otherwise, no major change in commentary since when we met last. Europe is where we are seeing the slowdown materially. And if anything, the fact that now the war is more or less accepted by everyone as probably going to persist for a while, those are being factored into the plans. So one hopes that as we do hope that the situation will return to normal and the war will see a quick end, one hopes that given all of these negative factors have been taken into account, we should start seeing some improvement in Europe going forward. But as of now, things are a little muted in Europe.
As we take that, let's hear it out then from Motilal Oswal's Ramdev Agarwal, who says that the IT story is much bigger than we think. He talks about where the largest profit pool lies in the Indian corporate world. Let's listen in.
The largest profit pool in India, which is growing also, is that of banks, financial services, and second is IT. Okay. IT has had the most dramatic profit pool expansion from 2000. In 2000, it was not even a percentage of the total profit pool. Today, it is more like 15-17% and growing. And there is no year when it has not gained little share. So my sense is IT story is much bigger. You don't have to stick to the current set of those top big companies. They might give you 10-15% index return or something like that. But below that, there will be a lot of companies which will try to come into the big league. So there will be mid-sized companies which will, because the economics still remain great. And then you have the new set of kind of small companies which are coming up, product companies, AI companies, and so there will be specialized services companies which will be coming up, where the cost structure is in India and the clients are all in US and Europe. So I think that business model has huge potential. We have done in last 20 this is a 23, 24 years story of Indian IT. And first $100 billion took about 20 years to get it, and next $100 billion came in just about 8-10 years. The third $100 billion, I'm not talking about a small number. Third $100 billion, I believe, is going to come in 4 to 5 years. So that's the nature of expansion, and there the players who are going to be disproportionately large, I think they'll make it, and we should be aligned to that.
Back with closing trades, right here in ET now. The Feb total GST collections have shown an uptick of nearly about 12%, but that's a year-on-year comparison. I think what would be more pertinent is to bring up the previous month and check in on that. But in the meantime, while we continue to see a good amount of recovery for the markets, that's holding up. And the good thing is that the market breadth has not gotten sticky after starting off well in favor of the advances. That continues to hold out. Of course, the Adani names are seeing a fair amount of recovery today. Adani Enterprises is sitting on a double-digit gain. So that, of course, helps. But that aside, you are also seeing a big covering in metals, some of the chemical names, Rain, Nalco, Hindustan Copper, and then BPCL as well, which is holding up quite steady, a good 4.5% up in the green as we speak right now. There's India Mart, AB Capital, RBL Bank, Hindustan Aeronautics, Indiabulls Housing, even Vedanta has actually made a good comeback of about almost 3.5%. Still a long way to go before it undoes the damage of the last 2 odd days, but holding up in the green nonetheless today. Jitendra Arora then joins in to talk about what his take is on the markets. Jitendra, hi, good afternoon. Good to have you on ET now. Just wanted to understand, how is it that you're reading into the market construct right now? Volatile, but on days it doesn't go anywhere. But still, given the FII selling that one has seen month to date and from the start of the year to now, just wanted to understand where you believe the market is headed next.
Hi. If you see the way we are looking at the market, there are a few forces which are driving the market as of now. The first one being obviously the market's understanding of how much are central banks likely to raise in terms of rates, both locally as well as globally. And we started the year assuming that the Fed is perhaps very close to their rate hikes and there'll be another 25 bips more to go. But I think with the incoming US data, which seems to be stronger than what market expected on both employment as well as the way the economy is holding up, we've seen that people have started repricing that number. And also market was expecting some kind of rate cuts happening in the late part of calendar year from the Fed, which now have more or less gone out of the window. So because of that, we are seeing that equity markets have had a very volatile period, and we expect some of this volatility to continue. On top of that, India has been a peculiar case where we have seen a lot of FII outflows happening in the month of January and February. Whereas we had seen that FIIs had turned buyers in domestic markets since July last calendar. But that quickly changed as China looked to open up and people started to play some kind of recovery trade in China. We saw people moving money out of markets like India and deploying it in market like China. Having said that, what we also see that the domestic flows remain fairly strong, and that's why we have seen that despite market falling, the fall has not been a very sharp fall. It's been a much more orderly fall, and whenever the uptick happens, it happens very sharp. So that's why we are very, very sanguine in terms of our outlook on the market. We believe that we may have volatile markets, but we do not see a very sharp correction from here. And as and when the Indian data keeps coming, we see that how economy is holding up, how the profit growth is panning out. We should see a sideways to slightly upwards market towards the end of the calendar.
Jitendra, in terms of the slowness in activity, whether it's on the retail side, whether it's on the new account openings on mutual fund side, how are you looking into that? Do you think people are getting tired?
I wouldn't say that because how I see it, that if you look at the SIP amounts, they are holding up very well. For instance, on the mutual fund, we saw the SIP flows were at an all-time high. So I think at least investors seem to have matured a little bit, wherein they have realized that volatility is a part of the market, and they will have to take it in their stride, but without diverting from their long-term asset allocation or looking at deploying money at every level.
In terms of sector allocation, how would you look at it? Last couple of years was all about very high growth, deleveraging. How, companies that did deleveraging were high, global plays did well, e-commerce companies which were growing pretty strong did well. You think now time has come to move to slow and steady winners?
In fact, if you see, been what's been playing out for last 12 months. If you see, the CY22 was all about, in some ways, a value kind of play, wherein the companies which had more steady uh, cash flows, along with reasonable valuations, they did very well in that period. And some of the internet names, etc., or the fast-growing companies which you mentioned earlier, they have seen reasonable correction. We believe that trade may continue to play out for some more, but we must remember that given the nature of these companies, which remains very fast growth, uh, either through price correction or time correction, the price becomes very attractive at one point in time. And at that point in time, your fund has to be positioned in them to take advantage of the fast growth that some of these companies may offer.
Jitendra, hi, afternoon. Let's also understand from you, as at the current juncture, are there any specific sectors or spaces that you would avoid?
I would still tend to avoid companies or spaces which do not have any triggers for next 2 to 4 quarters. And as you mentioned, some of them may be in the sectors which we've discussed. So even though we like a lot of growth names, but we realize that if the market or if the economy is likely to slow down, if there is going to be a constant fear about Fed rate hikes, and we do not see capital flows returning to India very quickly, they may continue to remain sideways. And the fact that a lot of these companies are PE owned, there is a constant supply pressure in the market with respect to the sellers. So that's why we do not see that some of these companies can do very well in this environment. So one may wait and watch before looking to add these companies.
Right. Jitendra, when we just talk about, auto sales numbers, overall consumption, commentary regarding that, X a real estate where, commentary has been particularly strong, or a hotel sector where it's been exceptionally strong. Do you believe there is a significant slowdown in consumption which is visible now?
There is some slowdown. I wouldn't call it a very significant slowdown, because we must keep in mind that we are coming off very strong, some of the very strong growth quarters. And add to that the inflation situation domestically, which has been relatively higher, plus a very plus slightly weak rural economy. We are seeing that there is some slowdown, but I wouldn't read too much beyond that. And I expect that growth should pick up as we move towards the later half of this fiscal.
So seen across the board, the order inflows for a lot of capex related themes starting to pick up. Do you think that that is going to really translate into revenue growth as well as a pickup in overall margins?
So revenue growth certainly, and margins, we must remember that some of these companies have shown a hugely improved margin over last 4 quarters because of the fact that commodities have cooled off. From here on, how much margin can be improved, we will be watchful. But even if the margin improvement is not very strong, the revenue growth will be reasonably sharp, and that should drive the earnings growth for a lot of capex related companies.
Jiten, great to have you today on ET Now. Thank you so much for taking the time out and joining in.
Thank you.
Okay, let's move on and let's focus on what are the intraday internals for the markets right now. And while the markets definitely are in recovery mode, so is the Adani group of names. Let me take it across to Kunal. He's been standing by on the chroma wall to try and understand what his observations are on the rebound in the Adani group of names. Kunal?
Thank you, Aisha, for that. So the three stocks which you've covered is Adani Ports, Adani Enterprise, as well as Ambuja Cements, the three prominent ones in the FNO category for our markets as well. Now the data is very, very interesting. So we started off looking at the Jan series as well as the Feb series data so far. And in the month of January, for example, Adani Ports was into an overbought territory when the stock was trading at 700, 750 mark. It fell very sharply, of course, on the back of the selling for the initial selling for the Adani group of stocks, and then the stock has bounced back again, and it's come back into an overbought territory just around the 600 mark itself. Now, when we talk of Adani Enterprise, the stock which was at an extremely overbought territory when the stock was at 4,000 plus levels, fell very sharply to almost 1100 plus mark, and then from there the rebound happened towards the 2200 levels, and now the stock is into an oversold category, which is why in the last couple of days you've seen a very strong and a ferocious bounce which has come back into Adani Enterprise. But then the third stock is interesting, Ambuja Cements. This stock went into a very neutral kind of a territory in the month of January. That's why the selling for Ambuja Cements is not been very intense. It's just been a net 10% to 15% kind of a band for Ambuja Cement, as compared to a band of more than 30 to 40% for the rest of the Adani group of names. Now the data in terms of price also indicates, as well as the open interest also indicates an interesting picture. The stock for Adani Ports, the open interest has dropped down significantly from the month of February towards the March. This indicates that traders are more willing to carry forward long positions, so the volatility would sub down significantly for Adani Ports, and the stock may get into a very gradual kind of an uptrend for itself. Adani Enterprise, on the other hand, the stock has witnessed an additional round of pressure in terms of build-up of open interest, and that's why short covering for Adani Enterprise could be very fierce and very intense as compared to the other names. And last and finally, Ambuja Cements, the stock has seen a very mild change in the open interest from 6.5, 6.3 crores to just mildly 6.1 crores, and that indicates that the stock is going through a very neutral territory. So three different stocks from the Adani stable and three different price action as well as reaction to the stocks.
Okay, that's the observation coming in on the Adani stocks and the technicals that Kunal has been mapping. Let's also throw focus on what Motown has been doing in the month of February. And Srishti is waiting by to give us an analysis on what the monthly sales have been like for all the numbers which have been declared so far. Srishti?
Okay, so when it comes to the auto sales data, let me start with the segment which is seen to be shining bright, and to our surprise, all the companies in this particular segment have performed way better than the ET Now estimate. I'm talking about the commercial vehicle segment, wherein from Eicher Motors, Tata Motors as well as M&M, a growth on a sequential basis is what we witnessed, and for Tata Motors and Ashok Leyland, they have grown around 12 and 18% respectively. And the reason clearly is that going ahead in April 2023, the real driving emission norms will kick in, which may increase the prices of commercial vehicles. So the pre-buying effect is what you are seeing onto the numbers, and this is why that's the story panning out for commercial vehicle segment. Coming to the passenger vehicle segment, herein what the dealers were indicating that there has been a drop of 8 to 10% in the inquiry levels, and that is what we are seeing onto the number front, because for M&M and Tata Motors, a bit of a disappointment coming in versus the expectation of ET Now, and a decline of 9 to 11% on a sequential basis is what we have witnessed. But for Maruti Suzuki, the numbers were almost in line. On to the two-wheeler space, Bajaj Auto has reported its numbers in line to the expectation, and a growth of 13% on their exports data is what the company has registered. And lastly, on to the agri segment, for the tractor sales, Escort saw a growth of 17% on a month-on-month basis, and M&M a decline of 11%, but a number was better than estimates, and they're still highlighting that the rural sentiment is holding strong despite the fact that the country is fearing the El Nino risk, but the companies are sounding very optimistic on that front. So that's the story for the auto sales data for the month of February. Back to you.
Okay, Srishti, we'll leave it at that. Let's also get in some closing trades as well, since we are just half an hour away from closing bell. Kunal, on your list?
So it will still be AB Capital, a stock which I've been bullish on over the last couple of days. It still looks very attractive, and I think it's just provided a breakout for itself. So that's a stock which I would buy as well as recommend to buy.
Right. Naresh, what about your closing trades?
So that would be a buy on Coal India. The stock has consolidated and not corrected in the last almost 2 weeks of the market volatility. Base made at 210, breakout about 219.20, very close to it right now. Looks set for a move towards 235 to 240 in the short term.
Okay, let's take a very quick break. Then on that note, when we come back, the last half an hour of trade this afternoon.
Back about 144 points higher for the Nifty, 17,450 for the markets, looking in decently strong at this point of time. Devang Mehta is now with us. Devang, thanks for taking out time for us. What do you make of the last 8 days correction and the bounce that we are trying to come back today?
Thanks, Pankaj, for having me on the show. Good afternoon to you and all the viewers. I think clearly what we have seen over the last 7-8 days is an exaggerated correction or a move, specifically led by the inflation fears across the globe. Secondly, importantly, the rate resetting expectations are changing across everywhere, particularly for Fed as such, because all the efforts they are making to tame inflation as such are not paying that rich dividends. And look at the labor data, look at the retail sales data. All these data points generally have been very encouraging that the economy is growing and they want to slow down. So my sense is that all this inflation and interest rate fears, which were sort of waning away a couple of months back, has come back to the fore. Secondly, in India also, we all know that the numbers, as such, the Q3 numbers were not as great as it was expected. Though in phases, you can say that the BFSI companies came up with great set of numbers, but across other sectors, there were still certain concerns about the margins or the operational profit. So my sense is that we had a good correction. India was trading at a 2 times standard deviation above the averages. I think the flow of money from India to China, which happened in January, or from other countries to China, which happened, has made sort of valuations again a bit attractive. We are somewhere in a comfortable zone as such valuations on a PE or a price to book, or even on a market cap to GDP basis. So my sense is the 7-8 days correction probably has given good entry points for the market participants. And in this correction, though 6-7% from above in the sense for markets, for Sensex and Nifty, but it's been a large correction for a broader market. So I think it's a good sort of an opportunity in adversity for people who wanting to participate in the next 3 years journey.
So how do you participate, Devang? Which is the best sector or best stock to play?
I think yes, on a sector-wise, clearly though a crowded trade, but private banks clearly are still not as such richly valued. A lot of these private banks are getting into expansion of NIMs, credit growth as such, 17-18% type of credit growth for the industry, and some of the banks growing more than that. And we know that we are probably out of that bad credit cycle. So NPS is probably going to come back and hit us after say 2 or 3 years. So I think no other issues for this. So this seems a crowded trade, but I think there's a lot of money to be made on the table. A little bit of a contra trade would be something like IT, which went through a difficult phase, sort of started to bounce back. But we clearly know that if the world even goes through a slowdown or even a mild recession in US, I think productivity enhancement, efficiency enhancement, and who better than Indian IT services to sort of cater that? Yes, give or take 5-10% correction more on these businesses, but somebody wanting to buy this in tranches is again a good trade. Again, being a very big fan of as such home improvement or capex as a theme, which again we are playing big time. So I think capital goods stocks, ancillaries, automation companies, something into robotics. I think these are some of the sectors which probably people can just hunt and sort of construct a portfolio around.
Refraining from giving us any stocks, but a lot of sectors being flagged off. In the meantime, let's also just quickly run you through some cues that we'll be tracking in tomorrow's trade. Globally, you've got the US S&P Global Manufacturing PMI, as well as the EIA crude inventories that we'll be tracking, the jobless claims from the US and the Eurozone CPI. Along with that, we'll be tracking the ECB Fed minute meetings and a lot of corporate action as well, the bonus and split for Jagran Prakashan. And you've also got the NASSCOM Tech Forum, day 2. It's the final day that ends. And speaking of, you've got the US recession, which still seems to be a risk that's looming over the entire IT sector as a whole. Let's get in a mood check and a sense as to what some of the top industry voices have been saying at the NASSCOM Leadership Forum.
Well, we're right here at NASSCOM, National Technology and Leadership Forum, happening in Mumbai. After a while of the virtual panels, this time around it's happening physically right here in Mumbai, and the energy is definitely palpable. If you look at the latest trends that are being talked about, it's not only in big data, analytics, artificial intelligence, ChatGPT, etc., but there's a lot of focus happening as far as sustainability is concerned, and how the startup ecosystem also is developing in the country, and how we are seeing innovation happening right here in India itself. A lot has been talked about the outlook of the IT sector this year. Yes, the commentary is a tad bit muted, that one needs to be a tad bit cautious. However, the Indian IT has geared up for the transformation that we are seeing with respect to the spends coming in, and that's why there's not much to worry. At least that's the word coming in from the CEO panels that we have attended. Attrition is something that they're saying is ebbing away. So the talent crunch that the industry was facing last year seems to be ebbing away at the moment, and that's not the key concern area. The only thing that the panelists, etc., are talking about is how they can gear up further with respect to the next leg of the IT industry, because at least for the medium term, the outlook is quite positive.
Interesting takeaways as far as that NASSCOM meet is concerned. Kunal, any view on large cap IT names like Infosys, TCS? Are they a part of your list?
Yeah, absolutely, Pankaj. In fact, I'm extremely bullish on few names like HCL Tech as well as Tech Mahindra. I think these stocks have just started to get into a breakout mood for themselves. I would believe that the breakout over here would probably be more of a multi-month uptick for these stocks. Wouldn't be surprised if Tech Mahindra, for example, which is trading I think 1100 10-20 odd mark for itself, would probably climb at least another 20% over that kind of a time span, and I would probably expect even stocks like HCL Tech to come back to levels of 1180 to 1220 over the very near term.
All right. Meantime, Naresh, let's get in a view then on the charts as to what your outlook is on some of these auto stocks. Bajaj Auto being fired up in trade, Tata Motors as well as a buzz, and you've got the auto sales numbers as we speak for a lot of companies trickling in.
So Bajaj Auto has been a tough one. It gave a breakout of 3600 mark. Then it saw a big spike on the last quarterly numbers. And since then it faded back to 3600, 3700 zones. So the only case we make out is now it may be getting into a higher range, which is basically 3600 to 4000 going forward. So for now, 3600 becomes a base and 4000 the upper end. So a buy on dips closer to 3650 and a stop loss below 3600. Then if you look at Tata Motors, this is a stock which is trying to make a major longer term consolidation. So the base has started moving up. Over the last 1 year, the base was 380 to 400 and all the bad news. Recently, it made a spike to 460, made a dip over the last few sessions towards 410, 450, and seeing a comeback from those levels. So I expect 400, 420 to now become a base going forward. But the major momentum for the stock comes when it starts sustaining above 460. But overall, it has spent almost a year and a half of sideways consolidation. So till the time it holds above 400, there is a good possibility eventually it breaks out above 460.
Devang, let's get in your take on the fundamentals. What's your outlook on the kind of auto sales numbers that have trickled in, and what would be your preference within the space?
I think yes, this is one space which is sort of emerging after a long while. It went into a hibernation phase for almost last 3-4 years. Be it the norms in terms of your pollution norms, or be it the insurance norms which got changed for the sector, and then of course COVID hit it very hard. I think after a 4-5 year hibernation, when a sector comes to the fore, I think fundamentally there are a lot of reasons why auto should do well. I think clearly the demand patterns in the country are changing. I think luxury segment is seeing a lot more uptick, and most of these companies now are into the SUV segment, are into the topmost sedan segment, and most of this have sort of done the hard job on premiumization, which most of these companies were not able to do earlier. So of course the vote goes more for Maruti as a highest passenger vehicle market, though it has lost a bit of market share, which is something that is worrying. But I think the roadmap that the company is showing and the skills figures which are being exhibited and numbers which is continuously seeing improvement in trajectory, I think most of these companies, particularly Maruti, would do well. And about auto, I think a lot of auto ancillary companies also look very interesting, apart from something like an Eicher, which has always been one of our top pick in our client portfolio. So Maruti and Eicher, I think we would bet for this too. And my sense is that the next 2-3 years, probably this sector would qualify as one of the top sectors to be.
Correct. In terms of capital goods, how would you look at it, Devang? Some of the capital goods stocks have declared good numbers, strong commentary. You also mentioned about the change as far as overall, operating environment and infrastructure is concerned. How would you look at that sector?
Yeah, a very good question. In fact, Pankaj, what has been happening for the Indian capex or capital intensive sectors, and that too particularly capital goods and infra, is that it always goes through a very difficult phase, and that's why it's also generally called a cyclical. But now what we feel is it's getting into that shallow cyclicality wave, and it's coming out of that. The sense one gets here is that there is so much of infrastructure projects that are happening. There's so much of transformer demand which is coming to the fore. There is greenfield, brownfield project expansion, as well as most of the companies are near about capacity utilization. So the sense one gets is that government itself wants to spend, and again, it's not in the sense of crowding out the private sector, but even private sector is going to expand for the next at least foreseeable half a decade. Companies like Siemens, companies like ABB, companies like Timken India, of course, not into directly into capex, but into bearings. All these companies are going to be sort of big beneficiaries. And when you see not only the order book, but even the execution capabilities of a lot of such corporates, you feel elated that the next 3-4 years belong to this type of companies.
All right, that's the view coming in on the entire capital goods space. Meantime, it's clearly the Adani group of stocks that are active and abuzz in today's trading session. But that added to that list, something like a Dish TV has spurted up about 9.7%. Uflex is abuzz. Minda Corp along with APL Apollo. Those are some of the smart movers on the Nifty 500 index. Vakrangi is in the green, and Bank of India as well is active. But in terms of the individual sectors, what's clearly taking leadership, of course, there's gains coming in across the board, is the entire metals basket. That sector is definitely seeing the most traction, and individual stocks as well are buzzing. You've got the Feb China PMI that's at the highest level since 2012. The Feb home sales as well have been seen by major developers at close to 20-month high. Indian steel prices as well have remained rather stable, and we've seen iron ore prices as well high, as well as the exports, which are looking rather favorable. Let's get in a view, Devang, as to what your sense is and what could be some of the triggers that you believe is fueling these gains in the metals basket.
I think generally we have been avoiding sort of metal stocks as a pure play, fundamental long-term bet in the portfolios. But of course, we acknowledge that there is a time which is now changing, and once the world gears up for a high growth phase, and that seems like the case now. China back fully opened, and India also probably getting into the next league of growth. I think these two countries itself probably would have a demand which is a lot more sustainable than what we have thought about. But by nature, these companies are high debt, high capital intensive companies. Probably you have to be a good trader or a good medium-term trader rather to get in and get out of this type of company. So as a portfolio fundamental, as a generally a philosophy, we tend to avoid it. But somebody who can probably make hay while the sun shines in the shorter term, medium term, can take trades over there. But not a big fan of metals as such.
Kunal, any view on Metal Pack, Tata Steel, Hindalco, any of these names?
Well, Pankaj, I'll be extremely bullish on the sector right now because, in terms of technical indicators and the kind of, mapping which we do, for sectors which have come back into a deep oversold territory, all the ingredients are right in place for these metal stocks. When Hindalco had hit that level of sub 400 levels, SAIL closer to that 80 odd mark, JSPL as well, when the stock, had corrected quite substantially. I think majority of the stocks from the space have come back into a deep oversold territory. So this may not just be a relief rally for these stocks, but this may actually be a strong turning point for many of these metal counters. So it all now depends on the risk appetite, the propensity to hold on to long positions. For short-term traders, you may look out for maybe another 4 to 5% gains on an immediate basis. But for a positional play, 6 month, 1 year plus kind of a time horizon, I think buying these stocks at current levels of classic mean reversion could actually turn out to be a good risk-reward ratio as well.
Okay, that's the view coming in on those metal stocks. Clearly a buzz in today's trading session. And then the other cluster of stocks that's doing quite well is the entire PSU banking space. You've got a whole host of stocks like a PNB that are a buzz, Bank of India, Indian Bank, 4% plus gains that you're seeing. Naresh, anything that you're tracking here?
So good correction took place in the PSU banking space, and now we are seeing a recovery. So it's a sector which can do well, and from here on, Say for example, if I look at a Bank of Baroda, it went to 190 to 200 band, came back all the way down to 150, 160. The interim highs are around 173 to 175. So that's the initial target where it can go to, and if that can sustain, then we get into a fresh trend. Same is the case for Canara Bank. It can go towards 300 to 310 over the next few sessions, and then we can see if that can sustain. We get into a fresh uptrend out here. But yes, the correction is done for the near term, and a bounce is in the play for a lot of banks. I would like Bank of Baroda and SBI at current levels, wherein they could give another 5% over the next couple of sessions, or say over the next 1 week.
Right. Nuresh, you have any view on metal names? Vedanta is making a comeback. Tata Steel is making a comeback.
So it's a tough call here because every metal stock has started making a different trend altogether. So if you look at Hindalco, is in a different trend compared to Nalco. The only pack which still looks on a longer term chart very reasonable in terms of formations is Jindal Steel, where it has continued to be sustaining well above the 520, 550 mark, which was the high in last April 22. So at current level, Jindal Steel looks interesting in terms of it should be relatively less volatile compared to the rest of the names. So Jindal Steel is something which looks interesting. That could be the first one to go make a new 52-week high and an all-time high.
All right, Kunal, I want to get in your take on the PSU banking space as well, because earlier this morning you flagged off 2 PSU banks that already had a heady run up yesterday. So you think that now perhaps it's already made the best of the move, or there's still more to go?
No, in fact, it started off with just few stocks which did good for themselves yesterday. But today there are many other stocks from the mid caps, large cap PSU banking stocks which are actually looking quite strong for themselves. And this has been a highlight for the PSU banking sector throughout. That when these stocks they get into a traction, it initially starts off with just 1 or 2 handful names, and then the momentum tends to trickle to the rest of the other packs. So I would be bullish on the PSU banking stocks. So initially flagged off Bank of India, Bank of Baroda. I would probably add even stocks like PNB, UCO Bank, Union Bank to that list. And my sense is that these stocks are getting into a very strong upward trending mode. So even if it's a mean reversion from the recent correction of 30-40% for these stocks, there could be at least an upside of 10 to 15%, if not more, for these stocks from their previous swing lows.
So then I assume that your BTST calls would include a PSU bank?
Well, absolutely yes, Aman. So the first one is actually PNB, the stock which again looks very attractive, very dominant kind of a candlestick pattern today for PNB. Bullish engulfing one, targets of 56 over the near term, which I would probably suggest, and stop loss could be kept at 47. And AB Capital, a stock which I've been recommending, again very bullish on the stock. My sense is it's just come out of a big bullish flag pattern on the daily charts. And this breakout has potential for the stock to come back towards 160 plus levels. So target of 162 on AB Capital, maintain that buy stance, stop loss 146.
Okay, and Nuresh, no surprises then to see a PSU bank on your list as well as a BTST trade.
Yeah, so continue to like PSU, and after today's move, it is PSU banks as well. So first is the buy on Coal India, trying to make a short-term breakout move. A stop loss at 216 and a target price of 225. Second is the buy on SBI, which has started making a comeback. Today is a strong tick, expecting it to follow up towards 545, 550 levels. A stop loss at 530.
Right. Devang, just in terms of flows or inflation commentary or, crude, what is the near-term things to track for as far as Indian market triggers are concerned?
I think, Pankaj, the single most important factor that I think we all will require is, of course, we can all endlessly talk about macro fundamentals, micro fundamentals, and sentiment as such, right? So inflation, interest rates as a narrative would be more macro. But finally, I think what we will need more is now foreign inflows. We have been there's been a large scarcity in terms of last 1.5, 2 years. Our market has just sustained more or less on domestic flows, right? So the SIPs of retail investors or the HNIs or family offices or sort of even ultra HNIs in the market have been very positive. And generally, I think the narrative towards Indian market globally is also very positive. I think that the key absence right now is the foreign flows, the timing of the foreign flows, as well as the quantum. Once I think we see once we see the interest rate and inflation narrative probably getting a little more silent or a little less obvious, I think fresh allocations has to be sort of the order of the day, and I think India will be a large beneficiary of that if we see firing on all cylinders, like if consumption, urban consumption, capex, credit growth, all this plus corporate profitability for the next 2 years. India looks very attractive, at least in terms of corporate profitability, plus economic growth. My sense is that sooner than later we would have foreign flows, which is going to be sort of a dominant factor in driving market. So that's the lack of foreign flows, as per I think your question. That's the factor which is sort of not sort of supporting the market right now.
And in terms of earnings, what do you make of Q3? You think there will be a material slowdown in Q4?
I think I was just analyzing a set of NSE 500 data points where we found that only the BFSI companies grew fantastically well. So around, say, 48% growth for a set of 80-85 companies, and the rest of the 410, 420 companies sort of had a decline in terms of their profitability. So the sense one gets is that it's right now extremely polarized in terms of earnings. The bulk of the load has been shared by companies in the BFSI universe, and even companies like Reliance or certain metal companies and certain consumption companies. I think it has to get a little more widespread. Yes, the fourth quarter I think will bring a glimpse of hope in terms of raw material pressure being a little more not very obvious. Because I think the inventories, a lot of companies you can give them benefit of doubt that they would have a lot of inventories built up, which would have got exhausted in the third quarter. So I think one hope is that the next quarter we see that inventory pressure winning off and the raw material pressure winning off as such, and the margins improvement we see. But yes, for the next couple of years, at least a 15-18% type of earnings growth is what market would need if we need that momentum in the market.
Okay, fair enough. In the meantime, just otherwise identifying some of the large cap stocks that are taking leadership this afternoon. And, what is noticeable apart from the Adani group of stocks and metals is the fact that you've got a UPL, for instance, that's active, auto stocks that are doing their bit, and Kunal, Reliance Industries as well at 23.43. Just walk us through how the stock has been trending over the past 1 month and what your advice is at the current levels on RIL.
Well, frankly, Avan, it's not been trending at all. It's been very, very sideways. Reliance Industries. There is always a hope and expectation that when the market requires large cap names to participate, there is always a hope that possibly Reliance could probably take the baton or take the charge from there. But then it's frankly disappointed. The stock has just remained into a range of 2200, 2250 as a major support, and on the upside, I think 2580, 2600 has been a bit of a medium-term resistance for Reliance Industries. But then it's all about classic risk reward. So for traders who are looking at buying large cap names, and specifically when large cap stocks like Reliance, when they come back to their major support points, it's always better and more fruitful to try and initiate longs over there because the risk reward is extremely lucrative. So that's the only reason why I would probably be bullish on Reliance Industries.
Okay, the stock hasn't been trending, but that's the view coming in on the technicals. Time to start winding down the markets, and it's a pretty different texture compared to what we witnessed last afternoon. So 0.8% higher, around the 17,456 mark. It's a gain of about 470 odd points on the Sensex. And the broader markets, mind you, have seen a nice degree of outperformance. And take a look at that advanced decline ratio, that's really telling the tale. Metals all the way, but there's support coming in from sectors across the board. PSU banks join the party, IT does well, and not to mention the Nifty Bank Index, it's a solid 1% gain. In terms of the movers in today's trading session, without a doubt, Adani's group of stocks definitely hogged the limelight. Adani Enterprises, a solid 15% on that stock, and it's the entire cluster of stocks. Adani Ports, Adani Green. You've got Adani Total Gas, Adani Power, Wilmar. Those are the entire group of stocks or cluster of stocks that have really made a comeback. ACC, Ambuja as well, merit a mention, along with an NDTV. And then metals, of course, have had quite a terrific run. So across the board, the likes of Tata Steel, Hindalco, JSW Steel, etc. have seen pretty smart move. Tech Mahindra in the green, TCS, HCL Tech fueling gains on the IT index. Heavyweights from the financial space like Axis, IndusInd Bank, they've all done their bit. ONGC packing in a punch, Bharti Airtel and auto names as well. Literally a handful of stocks in the red. Britannia, Power Grid, BPCL, as well as Cipla, HDFC Bank. Those are some stocks that have just sat it out. Within the broader universe, Dish TV gains, Rain Industries, Sonata Software, JK Lakshmi Cement, Hindustan Copper, Nalco Fire It Up, Himadri Chemicals, something like ES Bank as well makes its way to the winners list. Sobha sits it out, Brigade Enterprises as well, and that's what kept The real estate index a bit soft today. Sheela Foam is in the red. Something like a Bajaj Consumer, Britannia, TVS Motor posted its auto sales earnings, and you also had a Quest along with Birla Corp. Those have been some of the stocks that have just been pretty lackluster in trade today. But all in all, it's not been bad. You've got some stocks that have been in the spotlight today. Auto stocks, for instance, Bajaj Auto on a month-on-month basis, it's been a decline of 2%. Escorts month-on-month sales up 17%. Maruti, it's been absolutely flat. TVS Motor as well, that came out with its numbers. There was a block deal, of course, in Delivery, 3.8% stake in a bunch trade. So that kept that stock in the spotlight in today's trading session. Well, that pretty much sums it up in terms of the movers and today's trade. From Pankaj, me and everyone that put the show together, thanks so much for watching.